Let's talk a little Peloton. The headline is this: Peloton stock surges on deal to sell bike and accessories through Amazon, of all names. What specifically, Martin, did we hear on this deal from Peloton COO earlier this Wednesday morning?
This is a really interesting move for Peloton, JD, and I think really speaks to their larger turnaround plans that they've been executing really over the past 5 or 6 months, and it's absolutely necessary. Essentially, what's going to happen is that previously, when you could only buy the Peloton bike, for instance, on the website or in the showroom, you're now going to be able to buy it online through Amazon. You can even get support in terms of putting it together. You can decide when to want to receive it. There's a little more flexibility, and there is, of course, a lot more potential for sales for Peloton, which is incredibly important. Only last week, they jacked up the price of the Bike Plus as well as the treadmill, and that's a reflection of supply chain disruptions and the cost of parts of putting this all together. Now, whether or not customers are going to be able to weather that kind of price hike still remains to be seen, and whether or not Peloton can put together its turnaround plans writ large is also another question that investors are starting to ask. But they did like the fact that they were expanding at least the product distribution channel, and that sent shares up about 17% in early trading. But that is what we call a high beta stock, which means it does have the potential to move very quickly in either direction based on headline generation. Today, that kind of headline generation gave us the move that you saw. But nonetheless, the fact that it is expanding that development is interesting, but the company does need to increase sales, and it needs more than anything cash flow, because it's transitioning away from actually making the bikes to outsourcing the production to a company in Taiwan. They're going to do that. They're going to focus on connected fitness. They're going to focus on increasing membership, where they're getting recurring revenues from the software rather than trying to sell more bikes, even though what they're doing today is going to at least support that. So stock is up firmly, but again, more in line with the broader turnaround plans under the CEO, Barry McCarthy.
What is most attractive, you think, to investors for Peloton on the story? Is it now being able to firmly align itself with a name like Amazon that stands out to investors in the stock?
I think that's a big part of it, because, of course, the breadth of Amazon's distribution is immense. They're the largest online retailer in the world. So the fact that you're aligned with them in a partnership deal can only be good news. But I really do believe that investors are going to be looking at cash flow and the ability for Peloton to grow sales, and not necessarily of the equipment. I think to some degree, investors are worried that we're at a sticking point in terms of new equipment additions. And what they might be looking for is the recurring revenue in the software base for Peloton, the amount that we pay for subscriptions in the fitness classes and things like that, because that is going to be, again, more recurring and probably easier to predict and forecast. And both of those things need to happen, but certainly the recurring revenue in the connected fitness bit needs to happen more quickly than selling the new bikes. Now, whether this is going to happen in the right time frame heading into the holiday season is another question. But again, it's worth noting that the stock does gyrate pretty violently. So even though it's up 17% today, to watch it give all of this back into the end of the week would not be a surprise.
Absolutely. Let's talk about the other name involved with the story before we move on, and that's, of course, shares of Amazon. They're up about 9/10, almost a full percent at this moment. But what's the advantage here, you think, for Amazon in a deal like this?
It's a bolt-on for Amazon, really. I don't think it's a game changer in any significant way. I think what it does, though, of course, is put an end to discussion that Amazon might actually be a potential purchaser of Peloton. There were rumors to that respect in early last year. Apple has also been named as a potential suitor because of the way that the fitness equipment will probably fit in to the product ethos of Apple. Neither have come to fruition, and they're not really natural fits as such, but maybe does make a little bit more sense for Amazon, because at one stage they were looking at producing their own line of fitness equipment, bikes, treadmills, etc. They might be bypassing that now, and they may see the addition of Peloton as a way in which to sort of replace that ambition. But it remains to be seen. But for the most part, I think this is more of a bolt-on than a game changer for the world's largest retailer.